Hello everybody. Welcome back for another video. I hope you're all doing well and having an incredibly fantastic day. Without further ado, let's jump right into it. When I saw these numbers, I was taken aback. The market is doing exceptionally well. No matter when or how you're watching this, at the time I'm making this video, I haven't even checked the latest prices, but I know we are performing exceptionally well compared to previous periods. The level of accumulation we're seeing is setting off a lot of excitement. I'm a huge advocate for Bitcoin, and I mean that wholeheartedly. One of my goals over the past few years has been to help people understand that the global economy isn't performing as well as we've been led to believe, and that there is an alternative, a digital currency that has been thriving and has increased in value by millions of % since its inception. We've received staggering news from some of the richest people on the planet who have done everything they can to discourage people from entering the Bitcoin market. Despite their efforts, these numbers don't lie. When pension funds buy Bitcoin, it often goes unnoticed because many people aren't thinking about retirement. However, news about Bitcoin prices tends to grab attention, whether prices are rising or falling. My understanding is that numbers help people grasp the situation better. I can emphasize this in various ways across multiple channels. For those interested, I have a second channel called Money Rules. The significant change we experienced in January accelerated our progress. We are so ahead of schedule that it's a little scary. As an advocate for Bitcoin, one of my dreams was for hundreds of millions, if not 1 to 2 billion people, to start accumulating Bitcoin. I've told my friends and family, this is not financial advice, that I want them to accumulate at least 1 million Satoshis, which is 1% of a Bitcoin, so they have something just in case Bitcoin skyrockets. In conclusion, accumulation numbers are crucial. The market's current performance is extraordinary, and I hope this message helps you understand the importance of considering Bitcoin as part of your financial strategy. Over the past few months, I've emphasized the importance of Bitcoin accumulation, and you can verify this by looking back at my previous videos. If companies continue accumulating Bitcoin at the current rate, we might have no more than 2 or 3 years before all available Bitcoin is gone. To recap, there is a maximum of 21 million Bitcoins. As of now, over 19 million have been mined. It's estimated that 3 to 6 million Bitcoins are lost forever in inactive wallet addresses. Additionally, around 1.5 million Bitcoins are currently available on crypto exchanges, but this is problematic. Whales, or large Bitcoin holders, can manipulate the market by moving their coins to and from exchanges, creating the illusion of liquidity. Recently, we've seen large amounts of Bitcoin leaving exchanges, sometimes 7,000 to 15,000 Bitcoins per day, moving to private addresses, which reduces the available supply. Many people who hold Bitcoin on exchanges have no intention of selling, especially with the potential for significant price increases. We're currently in a scenario where Bitcoin could rise by $10,000 to $15,000 in the next few weeks. Given this potential, holders are reluctant to sell. Analysts predict that Bitcoin could reach $50,000 to $200,000 this year. If Bitcoin's price does double, holders will be even more hesitant to sell. Looking further ahead, if the bullish predictions of a $1 million Bitcoin in the next 5 years come true, those who sell now at lower prices might regret their decision. Thus, much of the Bitcoin held today is not truly liquid, as holders are not eager to sell, anticipating future price surges. These Bitcoins aren't going to re-enter the market's liquidity for a long time, which makes the numbers I'm sharing even more astonishing. This has been happening right in front of us over the past 6 months: January, February, March, April, May, and June. According to recent data, the top 10 spot Bitcoin exchange-traded funds, ETFs, excluding Grayscale's Bitcoin Trust, have amassed 548,556.62 Bitcoins. Back in February, I theorized that if these companies continued buying Bitcoin at this rate, they would hold between 500,000 to 1 million Bitcoins by summer. And indeed, we are seeing this unfold. These figures only account for a few US Bitcoin ETFs, but there are also Bitcoin ETFs in other countries accumulating Bitcoin, though this news doesn't always make headlines. For example, while companies like BlackRock and Fidelity were making large Bitcoin purchases of $300 million or $180 million, respectively, other ETFs around the world were also steadily buying $10 million worth of Bitcoin daily. Over time, this accumulation adds up significantly. Even less publicized regions like Europe, Australia, Singapore, and Hong Kong have ETFs buying large amounts of Bitcoin. Hong Kong ETFs, for instance, have been acquiring more Bitcoin daily than is being mined. This means that while the ETF volumes have slightly decreased, some companies are still purchasing more Bitcoin than is created each day. The new coins being mined are mostly used to cover miners' operational costs, and the excess is often bought by major banks. These ETF issuers are also buying Bitcoin over the counter from cryptocurrency exchanges, which reduces the available supply on these exchanges. With 100 million people in the market also buying Bitcoin fragments, the supply keeps dwindling. To put this in perspective, in the last 128 days, the 10 newly introduced spot Bitcoin ETFs have collectively acquired 548,556 Bitcoins, representing 2.78% of the circulating Bitcoin supply. If this pace continues, in 256 days, less than a year, they could hold over 1 million Bitcoins. Additionally, since January 12th, the new spot Bitcoin ETFs have acquired a notable amount of Bitcoin. The 10 funds have gathered 548,556 Bitcoins valued at $36 billion. Grayscale, now with its own ETF, holds 288,954 Bitcoins. This rapid accumulation of Bitcoin by ETFs is unprecedented and indicates a significant shift in market dynamics. Grayscale still has a 1.5% fee. For those who have missed the incredible news, we've been receiving non-stop reports that major banks around the world, according to their US SEC filings, are buying up these ETFs. Major banks like Morgan Stanley, JP Morgan Chase, the Bank of Montreal, and a couple of German banks are holding Grayscale's Bitcoin ETF as well. If you want the exact numbers, collectively, these 11 ETFs are now holding 837,555.55 Bitcoins as of the last 128 days. By December, they will likely have around 1.2 to 1.4 million Bitcoins. By summer 2025, these companies alone could hold 2 to 2.5 million Bitcoins. Previously, there was news suggesting that the traditional Bitcoin cycles might be over. If these companies accumulate 2 to 2.5 million Bitcoins in a year and a half, any Bitcoin sold on the market will need to be bought back immediately by institutions like Grayscale, Fidelity, and BlackRock. This narrative of ETF holders continuously acquiring Bitcoin is significant. Other companies are also buying Bitcoin directly into their wallets daily, but they are not required to announce these numbers publicly. Multiple countries are mining Bitcoin as well. I understand it's a stressful time, especially when discussing these developments with others who may not grasp the significance. Many people are aware of inflation and Bitcoin, but they don't fully comprehend the numbers and implications. A few years ago, we started seeing this disconnect, and it persists today. A few years ago, I used to share my insights about Bitcoin and its potential price movements with many people. Often, I felt like I was invisible. They ignored me completely. Eventually,